The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
To our viewers looking for something to kick off the Labor Day weekend, we thought you might enjoy a special, in-depth interview with Sam Bankman-Fried. He is, of course, the 29-year-old multi-billionaire and MIT graduate at the head of crypto exchange FTX, trading firm Alameda Research, DeFi project Serum, and now the new owner of options platform LedgerX. We usually speak to Sam about markets or how he plans to spend another funding round. But today, in this pre-recorded interview with First Mover host Christine Lee, you'll hear more about Sam's personal side, what he says is his mission, and his vision. Christine begins the interview with a question about regulatory challenges. With several countries issuing warnings against Binance, could FTX be next?
I'm not anticipating it. Some of this honestly is just, Binance has obviously done fantastically well as a business. And, some of this is a reflection of that. But I think, when we think about the regulatory climate, there's sort of one way to think of this, which is basically on a spectrum from like doing less to doing more. And if you do less, it's low risk. And if you do more, it's high risk. And obviously there's some truth in that, right? If you do nothing as a company, then you haven't broken it, like there are no laws to break with no actions. But I think that it's sort of an overly simplistic way of thinking about it. And it's a trap I think a lot of businesses fall into. And, the way that we try and think about this is we want to build as ambitious of a product experience as we can. We want to give our users what they want. But we want to also, do this in a legal way, in a regulated, licensed way. And what that means is often diving into a lot of specifics. And so, sometimes what this will mean is that there are some sort of, sophisticated products that you can launch if you get the right licenses. Sometimes it means that there are jurisdictions whose regulators don't want their sort of users exposed to a particular product. And so, with the UK, for instance, regulators there clarified, last year that they didn't want, local users to be getting leverage on crypto products. And so, we're not a UK company. We don't have like UK advertising or really UK presence, but we went ahead and restricted UK users on FTX to, I forget what the phrasing is, but, sort of retail users, non-professional traders, not being able to access leverage on the products. There's a lot of jurisdictionally specific things that we do there, with a mind towards what are the things which, sort of each regulator, finds important. And, globally, this means having a strong AML KYC framework, but it also means, thinking jurisdiction by jurisdiction, being super responsive to what each regulator has said, and trying to be proactive about it, trying to apply for any licensing that we can. And, rather than just trying to kind of curtail the product from the beginning, thinking about what are the specific ways that are important to, either to regulate, license, or limit the offering in specific places.
Mm-hmm. So you mentioned leveraged products. FTX offers leveraged tokens. CZ, the CEO of Binance, came on CoinDesk and criticized FTX for having them because not many people understand them. There was a huge fiasco, nevertheless, in May when the crypto markets crashed and users lost a lot of money on Binance because the tokens, the leveraged tokens that they had, seemingly didn't behave the way that they were intended to behave.
So, there's certainly among the more complex products. And, I think certainly we've chosen different, different designs there. The reason that we've designed ours the way that we have is, first of all, it sort of is the best mimic for how products are designed in other areas. But the second is that I think what we've aimed for above all else is transparency. Everything about the leverage tokens on FTX is fully available. There are APIs that return all of the relevant information in real time, and historically, we have web pages up that give all the relevant information about them. And we'll give you historical data as well. It's sort of completely transparent about exactly how they behave. I think they're products that a lot of users like because they allow them to get, 3x exposure without having to have liquidation, liquidations on their account and without having to manage the margin themselves. And it can be a useful product also for other venues that want to list them, because these are tokenized ERC20 tokens, but that don't have risk engine or liquidation engine themselves, and so it can sort of offload to leverage tokens. So I do think that there are cool uses of them. They're also sophisticated products, and we have a lot of explainers. In order to trade them, you need to go through a quiz on FTX, and we are everything about them is fully laid out.
Right. How about that concern? And a lot of regulators talk about this, that, a lot of people, retail users, may not understand these products, and maybe it's not a great idea to put them out there and have that risk of them losing a lot of money.
I think we're sensitive to that. And, I may certainly be interested in getting more user feedback on them. I will say that, we do have, so in order to ever trade a leverage token on FTX, you have to first pass a quiz about how they work. And this quiz includes some of the, sort of the intuitive properties from their names, and also the unintuitive properties, and has links to documents that explain exactly how they work in detail. But you have to first sort of correctly answer the questions about how they behave in order to first trade them. It's not a foolproof system, but we see it as a way of sort of raising the barrier for understanding, to be able to trade them, so that it's not not is it just like a self-certification thing, but at least demonstrating some amount of awareness of it. It's something that some of our users really like, how they work. Some of the users don't like it, but I think it's also something we're totally open to feedback, frankly, from regulators on it. If this is a product
earlier
that it doesn't want, we're happy to risk.
Right. So just switching topics, earlier CZ told me that decentralized finance would eventually take over centralized finances, and that's why Binance is getting into the whole DeFi area. Is that something you agree with?
I don't think it's going to take over centralized finance. I think it might grow a lot from where it is today. Right now it's 5% of crypto and 0% of anything outside of crypto. And I think that in the case where it gets huge, where it does really, really well, it could get up to 15 to 25% of finance on DeFi. I think it's going to be hard for it to get close to 50 or 100%, because it's fundamentally not super. It's not super computationally efficient. When you're using DeFi, you have to have thousands of nodes computing every transaction, and you have just limitations of a minimum possible latency of around 100 milliseconds, because that's how long it takes light to travel around the world. So, HFT firm to HFT firm trades aren't a great fit for DeFi. Video hosting, not a great fit for DeFi. There are sort of some things that don't really fit well in that paradigm, which I think is going to limit it from taking over everything. But I do think that it could, if it improves a lot in the user experience and transactional throughput, become a significant.
You co-founded Project Serum, your entry into the DeFi space. Tell me a bit about Serum and the power that it gives users.
Yeah, so, when we're thinking about Serum, what we're thinking about is okay, you could imagine 20%, something like that, of transactions happening in DeFi. What would it take to get there? What would you have to build in order for that to be even a possibility? And I think one of the core things is it needs to be really, really high throughput. The largest companies, the largest transaction facilities, the largest social networks, they have millions of transactions per second. And so you need to build a decentralized ecosystem with millions of transactions a second if you want to really reach that upside. And so what Serum is it's built on Solana, which is, as far as we can tell, probably the most scaling blockchain that exists today. It's at 50,000 or so transactions a second right now, but has a coherent roadmap to grow that out to millions, and no other layer ones are even close to that in terms of their ambition. And then we help build out a DEX on Solana, the Serum DEX, which it's unlike sort of most existing DEXs. It's not an automated market maker. It's not sort of a sort of simplified version of an exchange to fit in a low transaction environment. It's actually a full exchange with an order book, a matching engine, fully on-chain, fully decentralized, which I think is sort of is the core liquidity venue that you see across all areas of finance. And, hoping that it can serve as a building block for an ecosystem.
And do you see Project Serum evolving or complementing with FTX or Alameda Research in some way?
I think it totally could. There's a lot of interconnectivity in the crypto ecosystem. Whether you look at Solana and SPL token support by FTX, where a lot of people use it as a ramp for DeFi. Whether you look at or token listings, frankly, whether you look at liquidity in the Serum ecosystem, I think that there are lots of ways to cooperate and to work together. Although I do think of it as fundamentally a different enterprise than either of those. And a natively decentralized one.
So Alameda Research accounts for most of the volume at FTX, at least in the beginning it did. Is that still the case, or do you think that presents a potential conflict?
Yeah, it's a good question, and I think it was stressful at the beginning because of that. And when FTX was first founded, Alameda was a very large fraction of the volume there. It was really valuable because it helped FTX, kind of solve this chicken and egg problem of how you can get an exchange that has liquidity with no users or users with no liquidity. But I also think it's not the healthy long-term situation. And over the last few years, Alameda's fraction of volume on FTX has dropped enormously. Alameda is no longer the largest, even the largest trader on FTX, let alone the majority of the volume or anything like that. And so I think it was a transition that absolutely needed to happen for FTX to be able to reach its potential because it needs to be able to stand on its own as a product, and it can now. And I think that's been super important to its growth. And I think the big thing that happened there was it just got big enough that it made sense for a lot more liquidity providers on board.
Yet people are concerned that Alameda could be using data from FTX and trading against users.
Yeah, it's not. I mean, its account is like all others. It doesn't have access to special data. It's using the API, same API endpoints that other people are, and acting as a liquidity provider there, as are a lot of other firms, across the crypto ecosystem and the wider financial ecosystem. I totally understand the concern. But it's that's never been the vision for FTX.
You built Solana. You built on Solana because you felt it could scale. Why not use Ethereum? And do you believe that Solana could overtake Ethereum eventually? So
it depends on what metrics you're using. Certainly by transaction count, I think it already has. But I think the scalability was a big thing. And Solana, it's at 50K TPS right now. It has a roadmap to scale that up to millions over the next few years. Ethereum's at 10 transactions a second or so right now. And it has a roadmap to scale that up to thousands, with ETH 2.0. And I think that for some things, that's fantastic. But for a lot of applications, that's not enough. I can say FTX alone right now has tens of thousands of effective transactions per second going through it, as do most major exchanges. So you can't even fit a single large centralized exchange on a shard of ETH2. And so I think that's going to be a big blocker against some sorts of applications growing on that ecosystem. And I think you just need a layer one, or at least whatever chain it's effectively operating on, to be able to scale up to millions of TPS to reach the upside. I think that's not the vision for Ethereum. It may be great for other things, but I think for like the most demanding applications, it's not the right substrate.
So most people in the United States don't know who you are yet, but you could become Web3's Mark Zuckerberg. Facebook's motto, back in the day was move fast and break things. Do you have a mantra?
Yeah. There's a time when that bore some resemblance, I think, to our mantra, and that's definitely changed. Because one thing that very quickly became clear to us is customers don't like broken exchanges. And that sort of sounds silly, but if your social network goes down for an hour once, you're like, fine, I'll go eat dinner. I can shit post on Twitter later. If your exchange goes down for an hour, you can't say, like, fine, I'll buy Bitcoin at $28,000 in an hour. It might not be trading there in an hour, and so it's the uptime requirements for an exchange are way, way higher. And so I think that to the extent that we have a mantra, it's almost the absence of one, but it's sort of like, take each situation as it is and do the right thing in it. And that sounds really silly. And it sounds like, okay, duh, that's just like, definitionally true. But what we see again and again is a lot of organizations will get caught in these traps where there will be a situation and there will be like a clearly right approach to it, and it won't be the approach they take. And when you try and drill into why, you get this very confusing, messy answer, which is some combination of, I don't know, it's not really how we do things. Like, it's not really how we're structured. Like, it's not how the committee works or the chain of command works. And I think like our sort of philosophy is like, we want to do the right things. We want to build the right product. We want to do it quickly. We want to do it well. And we want to build a nimble organization that can directly do that. And, you know, if there's someone who is doing something that you have input on, you should go talk directly to them. There shouldn't be any chain of command you have to go through. Do that, obviously you can if you want to, but like by default you shouldn't. And that, you know, we're totally open to considering, you know, we don't, you know, when there's sort of a new feature proposed, we very rarely respond like, no, that's not what FTX does. That's not our wheelhouse. You know, instead we're like, huh, that's interesting. Like, is there a lot of value there? Do we think we could become good at that? Do we think it, you know, it's worth the effort to? And if so, we'll try and do it, even if it's totally new.
Are you looking to dominate the digital financial world?
Not all of it. I think that there's a lot of pieces of it that I think we could grow a ton in and add a ton to. But I mean, at some point you're just like trading with yourself, which is stupid and also kind of like dubiously legal. And so like, obviously, like, you know, what is FTX? It's sort of a piece of infrastructure, right? And so, you know, FTX is not the buyer, it's not the seller, it's not creating the demand or the supply. What it is it's building out the infrastructure and tooling to allow people to do the things that they want to do. And that's sort of how I think about it most. And so when I think about, you know, what areas of, you know, the digital ecosystem and, you know, especially the digital financial ecosystem, it would make sense for FTX to try and become big in, you know, what I think about is in every area, what does the infrastructure look like? And is that something that FTX should be trying to provide? Rather than like, you know, but not sort of thinking about like, well, where's the, you know, should it be the buy or sell demand? That's sort of not what FTX does.
Okay. Well, nevertheless, you're making your presence known. You've recently announced your partnership with Tom Brady and Gisele Bündchen. You first appeared in a conversation with Tom Brady at Consensus by CoinDesk this past May. We'd love to be able to take the credit, but maybe you can tell me more about that, how that relationship came about.
Yeah, it's a ton of fun. So I think we originally reached out to sort of them and their agents and started talking, you know, just sort of kicking the tires on whether there's a partnership there that made sense. And I think what quickly became, and you know, we did it because I think they're sort of like, you know, really transcend their genres to kind of an impressive degree. And they have sort of an audience and you know, personality and brand that really is a lot bigger than like, you know, just football or modeling. And I think that like one of the, that's sort of like obviously one thing we're looking for, but the other big thing, which is that we were excited to deal with them, they're excited to deal with us. That's worth so much. It's worth so much more than almost anything else that, you know, they're just like, I mean, you know, Tom's excited about crypto and about exploring it more and has been for a while, but from before we ever met. And, you know, I think Giselle's really excited to work with us on the foundation. And you know, that just means there's going to be so much more that we can do together.
Cool. Yeah, Giselle's taking a charitable role, I understand. Tom Brady will be a spokesperson. And I understand charity is very important to you. You also have the MLB sponsorships, FTX Arena, which is the arena where the Miami Heat play.
Yep.
You know, a lot of crypto bros use their wealth to party and live a hedonistic lifestyle. Yet I'm told you still live with roommates. You sleep on a bean bag in your office and you believe in effective altruism. So first of all, is it still true that you live with roommates? Second, how often do you really sleep on that bean bag? And third, tell me how you got into effective altruism.
Yeah, I'm at my apartment right now with roommates who are probably asleep, hopefully still asleep even though I'm talking. I sleep on the beanbag most nights. I think more than half the time that I sleep, I am on the beanbag next to my desk, and it's sort of unusual, but I find that it helps me focus. I find that it helps me keep concentration, sort of keep my mental space focused, rather than having to sort of like relearn everything each morning and reboot up. You know, in terms of you know, effective altruism, I sort of got into it in college originally. I sort of have been a utilitarian for a while, but not hadn't thought at all about what that actually meant for my life until college. And, and I sort of got there and, kind of like quickly became like, okay, fine. Yeah, there are implications that this has. Like, if you're actually thinking about what you can do for the world, that's going to have implications for how you should live your life. And, got sort of involved with the EA community there and, ended up, deciding to go into Earning to Give, which is, figuring out how I can make as much as I can and donate as much as I can, which, led me to Wall Street and then eventually, where I am today.
You were one of the top donors to the Biden campaign. How much of your income do you give away? Do you foresee a percentage every year, or how does that work?
So eventually, basically all of it. This was a much easier question to ask, to answer when I was at Jane Street, sort of like, had like, salary and bonuses each year. And sort of like, the answer is a bit over half that I was giving away. Planning to give the rest away later, storing some up for sort of like, exceptional opportunities. It's harder to define right now. So it's sort of like basically all of the like, money that I take out of any of the companies is just to donate. But most of the money that I'm sort of quote unquote making is staying in the businesses because they're still scaling up a lot, and it'd be silly to be like fundraising and simultaneously taking out money. So,
just one last question because we got to wrap up. Yeah. But would you say you're religious or adhere to a certain brand of philosophy?
So I'm a utilitarian, and what that means basically is, in the end, I want to do whatever will sort of maximize ultimate aggregate, happiness and well-being. And that sort of sounds a little bit tautological, but I think it does have real implications. I think one of them is, you look at most of the people who will exist are not yet born in expectation. And so I think absolutely crucial is thinking about what things can we do today that might impact what the whole future looks like, what the whole run of the world does. And obviously that's a hard problem, but that it's not an impossible one to have some impact on. It means that I think that animals matter as well, and I think that I went vegan when I was sort of in college because of this, and that you look at, especially when you look sort of like factory farms today, they're not happy places. And it means that if you're trying to save lives through medicine, probably the most efficient ways to do it are looking at neglected tropical diseases, and especially in sub-Saharan Africa and India, places where diseases like malaria and systemiosis are still killing lots and lots of people, and they don't kill anyone in America anymore because there are ways to prevent this. And you can sort of save people's lives for single-digit thousands of dollars, which is simultaneously kind of really sad and really inspiring, depending on which way you look at that. But that's sort of the the philosophy that guides me.